Hello, traders. This is Gary Wagner with the Gold Forecast. Approximately 10 o'clock a.m. Honolulu, Hawaii time, Thursday, January 6th, and this is the Daily Report. Gold is currently trading under some pressure this morning, off about $7.40. The real story is predominant buying is actually lifting the price of gold up about $2.30, while the strength of the U.S. dollar is bringing it down about $9.70. Therefore, this negative 740 change. Traders, you know, yesterday I spoke about the fact that when we see this market correct, I look for a significant variation pattern that I have identified that has occurred multiple times in the market. I was looking at this doji, almost hammer-like candle that we had yesterday after this fall, as you can see right in here. And to actually issue a signal on this, you need the following day to actually get confirmation. Now, confirmation would be a red candle, meaning it opens and then closes higher, and that would complete the pattern, something like this. We obviously didn't get that. But traders, realize that we have seen this pattern on multiple occasions. Let me just point those out to us. Traders, what I've done is actually circled the areas in which we have found this variation, acted upon it, and actually issued buy signals from these. And as you can see, really what we're looking for, and I'll put it on the screen, is this variation. You can see that coming up now. But as you can see back here, and this is back right before April, we had this strong indicator, the black candle, the small doji-like candle, followed by that long update. That gave us an excellent buy signal right in here. You got a variation off of it right here. You got another one here. The market comes down, this black candle, this hammer-like candle comes in, and then the red candle. We got the pattern here. We also got the pattern here and here. We acted on both. The last couple of trades were actually based on these three particular patterns that we saw right in here. And what I want us to note is that in many instances, right after that, you would actually get this strong uptrend, as you can see here, and a strong uptrend here. Of course, a real nice defined uptrend here. You get the uptrend, but it comes 1-2 days afterwards. And on this one, the market did take off. But on this last trade that we took, we really had to sit within the marketplace after taking that position on for about a week before the market solidly took off. Now, why am I bringing that up to you? The reason being is just because we haven't seen this pattern develop the way we would like it to today doesn't mean that this isn't going to be a valid pattern that is going to materialize into a good buy signal. Here is what I'm looking at. We are no doubt in critical territory. The market must, and I repeat must, to maintain this long-term bullish stance, which I still have, it's got to hold the longer-term trend lines. I believe that a critical area is right here, and that is 1365. It really needs to hold that. And as you can see on a consistent basis over the last couple of days, it has. And I talked about yesterday the fact that I do believe we have at least tentatively forming this double bottom right in here. And we will have to see how that pans out. But here's what I'm looking at. When we take a look at this market, we did get that doji, we got the long black candle, we did not get the confirmation candle. If we get that confirmation candle over the next couple of days, to me, it is still just as valid of a signal as if we got it immediately following. So that if tomorrow we get some sort of strength in there and we find the market goes up, at that point, we will issue a buy signal and look for the market to go higher. On the other side, we do not want to see it break this one particular point, which is that 1365 that I believe is really critical support. In terms of resistance, of course, that $1,400 mark, well, that's the mark that we really want to reach, breach, and break for us to believe that we're pretty much out of the water and we have weathered this correction. As for right now, my recommendation is going to be to remain flat, hold no positions. Let's see how this market wants to develop. Of course, we have this triple top here. And in an article that went live on Kitco yesterday, I talk about the fact that every time we have seen these double and triple tops in gold over the last couple of, let's say the last year or so, what we have noticed is that it is really trying to ramp up and break to these enormous new highs that it's never had before. It takes more than one or two plays to get there, but once it does break that point, it breaks out in an aggressive manner and breaks out hard to the upside. Whether this is short covering, a combination of crowd mentality moving in and trying to push it, that's neither here nor there. But my recommendation, let's remain flat in the marketplace right now. Let's look to see if this pattern develops into a full-blown buy signal. And then the other side is let's be very, very cognizant of where we are sitting in terms of relative support. And we absolutely need to hold these levels, because if we don't, I think that this correction could be much steeper. I would look for, if the correction, and I don't believe that that would be the case, but I would look for a retest of around the 1320. As I said, as long as it maintains itself above this critical level right here, I still feel that the bulls have a solid advantage. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for the weekly review on Friday. Bye-bye.